Here. Hope you're doing well. Welcome to another Smart Silver Stacker live stream. And I've got some very important things to discuss in tonight's video because this is a critical week for silver, for the economy, for the dollar, for inflation. Got a lot of very important economic developments that will be playing out this week. And I want to go over those because there is a possibility here. Now, I'm not saying this is entirely likely, but there is a possibility that we could see the price of silver come under some significant pressure, depending on how these developments play out. So that's what we're going to talk about going forward. Now, I do want to just do a quick price alert for anybody who is interested in doing some stacking. SD Bullion was just ranked 96 by this online digital retailer measurement, and as a result they are doing a spot price deal where you can get these 1 ounce 10th anniversary rounds at spot. They've got some other big sales going on as a result of that, so make sure you check that out. But that being said, and hey, I don't know how long that sale's going on, but if it lasts and we do see a big pullback in the price of silver, it'll be a good opportunity to do some stacking. Now, what is the data that is coming out this week that's so important? Well, we've got a couple of things. We've got tomorrow, beginning tomorrow, we've got the CPI numbers for May. And that's an important development because it's going to affect how the rest of this week plays out. Now, the CPI for May, the anticipation here is that we are going to continue to see disinflation. We're going to see a 0.1% increase for May, and that would lead to a 4% year-over-year increase in the CPI. If that's, that's the expectation, if everything plays out as expected, the consensus estimates. And the core CPI, the consensus is that'll be going up 0.4% month over month, and that would lead to a 5.3% year-over-year core CPI. And that is, of course, excluding food and energy, the stuff that is a little bit harder for them to manipulate through things like releasing oil from the Strategic Petroleum Reserve. We know that that has been occurring recently. So, the core CPI is still high. And then the reason that that's so important is because of the timing of this. On Tuesday, we get the CPI, but then on Wednesday, we've got the Federal Reserve will be wrapping up their FOMC meeting, and we're going to get their decision on what to do with interest rates. Now, this is the thing that could put some significant pressure on the price of silver. Now, I'm not saying that that is likely, but there is a possibility that if things don't go the way markets are anticipating, we could see the price of silver pull back. We could see the US dollar index rally. And a constitutional stacker in the chat there saying, smash the like button, rallying the troops. Yeah, if you think this is important information, please do smash that like button. So this is the CME FedWatch tool. This is basically what markets are anticipating the Fed is going to do at that FOMC meeting on Wednesday. And as you can see right now on the left there, 79.1% chance of a pause, or as the Federal Reserve likes to say, a skip, because they've been using that word skip in reference to not hiking rates at this June FOMC meeting. However, there is still that 20.9% likelihood of a continued rate hike. Now, if we do see the Fed hike rates, even if we just get another 25 basis point rate hike, that could cause a sell-off in the price of silver. In fact, it's almost guaranteed, especially when you consider that that is not really what the markets are pricing in now. That would be the unexpected move. If we do get a surprise rate hike, because we know that, the only thing really driving price action in these markets is the Federal Reserve. What they do, what they say, everything is dependent on the easy money. And as the Fed has been hiking rates, there has been this anticipation building that there is going to be a pause, or as the Fed says, skipping. So if we do get a surprise hike, expect silver to sell off. And I would view that, however, as, a buying opportunity, because the long range picture remains unchanged. Even if the Fed hikes 25 basis points, it's not going to solve the debt problem. It's not going to solve the inflation problem, but it might spook investors in a very big way. However, if the Fed does what markets are anticipating, and that is they pause the rate hikes, this could have the opposite effect. Now, I don't think that it will play out as rapidly as if we get a surprise rate hike. I mean, if we get a surprise rate hike, if the Fed comes out and they say, yeah, we hiked rates 25 basis points, silver is going to sell off. It'll be in the red in a very big way. I mean, who knows? We could get one of those 7, 8, 9% down days. Again, because that is not what the market's expecting. So as it comes as a surprise move, it will, trigger a lot of fear and a lot of selling. But if the Fed does what markets are anticipating and they skip the rate hike, then I think we could see a series of events which ultimately leads to much higher silver prices. Not immediately, but in the relatively short term. And the reason for that is, the reason they've been using this word skip instead of pause in their, jawboning the markets here leading up to this meeting when they say, well, we might skip a rate hike. It's because they don't want to give the impression that they are pausing for any significant length of time. However, I think that if we do get the Fed doing what markets are anticipating on Wednesday, not hiking rates, skipping a rate hike, it may very well mean that the Fed is pivoting. It may signal that rate hikes are done. And the reason for this is that the Fed knows that we have a tremendously weak economy. Now, I've got a $9.99 super chat from iReview with a smiley face. Thank you very much, sir. Appreciate that. Anybody who tips, always greatly appreciated. It does help me to make more of this content for all of you. And if you don't want to donate, I understand that completely. You can put that money towards some shiny, but please do smash that like button. It's the very least anybody can do. If you're enjoying this content, it helps to spread the information, and I greatly appreciate it. Just like I appreciate everybody who tunes into these live streams, which are a lot of fun. Now, the reason that I think that the Fed is probably going to skip, and the reason that the markets are pricing this in, is because we do have an incredibly weak economy. There's been a lot made of the recent non-farm payroll data, which was higher than expected. But then more recently, we got these jobless claims numbers, which were also higher than expected. So which is it? Is the economy strong? Are we adding all these jobs, or are we getting layoffs and are we getting more jobless claims? Well, I expect that it is probably the latter, because when you look at most of the other data, it confirms that we are in a weak economy. And I mean, that is what one would expect in this massively over-leveraged economy, in an environment of raising rates, and in this deglobalization situation we find ourselves in, where supply chains are breaking down, inflation remains elevated, the world is de-dollarizing. Excuse me, got a little swig of water there to wet my whistle so I can keep going here. But, the Fed knows that we are in the worst economic crisis since 2008. Already, the deposits of the banks that have failed exceed the total deposits of all the 24 banks that failed in 2008. Commercial real estate is coming under tremendous pressure. The Fed doesn't want to collapse the economy because they know that when things really start to fall apart, that is when they are going to have to abandon the rate hiking agenda completely. They're going to have to abandon their inflation fight. And so I think that they're trying to kind of soft play this and indicate, well, we're still committed to fighting inflation, but we're going to skip this time because, things are looking a little weak. But very likely, once they do that, that's not going to, be a temporary skip. They're going to be done hiking rates. And in fact, I think that as the economy deteriorates following this skip or this pause, whatever you want to call it, eventually the Fed is going to have to go back to cutting rates, slashing them, resorting to quantitative easing. And there is historical precedent for this in the very recent past. We had back in 2019 when the Fed was, trying to normalize their balance sheet, trying to hike rates, trying to undo all the QE of the past decade that followed the 2008 financial crisis. We had them stop hiking rates in January of 2019. And by the way, when that happened, we saw a big rally in the stock market. And I think that this time around, what we're going to get is if they pause the rate hikes, we're probably going to get a big rally in commodities, because what will really happen is that the US dollar index is going to begin moving to the downside. Now, let's see. Constitutional Stacker says he's going to go live in 30 minutes. Yeah, so I'll be done with this live stream by then. So make sure that if you're looking for something to do in 30 minutes, you check out Constitutional Stacker's live stream. But back in 2019, they stopped hiking rates in January. And, the idea was, well, the economy's looking okay. We don't want to, deter economic growth. Inflation was relatively low. I think back then it was right around the 2% goal or target of the Fed. I mean, why they have a 2% target on inflation, why just no inflation wouldn't be ideal is kind of beyond me. But that's what the Fed, they like to aim for a 2% inflation target. So in January of 2019, they stopped hiking rates. Well, what happened? They didn't resume hiking rates after that happened. What happened was they let rates stay flat for a while. Then in October, they cut rates by a quarter basis point to kind of stimulate things a little bit. And they indicated at that point that, hey, we're done cutting rates too. We're just going to let this play out. But then 2020 came along. We know what happened then. I mean, cut rates to zero, go into the market, buy nearly $4 trillion of treasuries, blow up the Fed balance sheet, and issue in massive monetary expansion and ultimately massive inflation, which we're still living through right now. Now, there's a couple of reasons why the CPI has come back down. Why tomorrow we're expected to get a 4% year over year CPI, which, by the way, is still not an insignificant number. But part of it is economic weakness. I mean, part of it is that the CPI is just cooked. It's a cooked number. The CPI, I mean, they do all these hedonics and adjustments and substitutions, and they don't really measure rents or the price of housing. They do what owner equivalent rent, where I think the way they determine the cost of housing is they do like a survey by phone, or it's just crazy stuff that they use to suppress the CPI. But even the suppressed number is coming down. It's a little lower than what we had last year. But that is all going to change, because what is going to happen here is the economy will continue to deteriorate, even though rates have not gotten that high. I mean, we're at what, like 500 basis points. So, 5% rates, yes, it's higher than we've had recently. However, historically, this is still incredibly low. But the problem is we have a huge amount of debt. We've got $31.8 trillion national debt. We have got record credit card debt near $1 trillion, record mortgage debt, record student debt. Every type of debt you can imagine is at near record highs or new record highs. And so even this level of interest rates is ultimately going to prove to be unsustainable. And the Fed knows that, and that's why they're probably going to pause on Wednesday, or, skip, as they say. And it's funny, they like to use these words because the Fed is under this misconception that, it's not expanding the money supply, it's not huge deficit spending that creates inflation. All it is people's psychology. They think that everything contributes to inflation but them. It's people's anticipation of inflation. It is greedy employers or greedy businesses raising prices to, gouge the market and increase profits. It's workers who are demanding higher wages because they're greedy. In reality, the primary driver of inflation is just the expansion of the monetary supply. If you look at a dictionary from 1971, that's what the definition says. It says it's an expansion of the money supply that leads to higher prices. But of course, since then they've changed the definition of inflation. If you look it up now, it just says higher prices. And you get things like Jerome Powell saying, well, now we understand better how little we understand about inflation. And he's not an idiot. He might come across that way in some of the things he says, but it's because he's jawboning the markets. He knows what causes inflation, but he also knows that there's no way to draw down the debt to balance the budget in Washington. And so the best he can do now is try to control perception about inflation, try to jawbone the markets, try to convince people that inflation is over. And so, we see inflation decline in the short term, but ultimately the inflation is going to get a lot worse. Also, the economy, as it continues to deteriorate, the Fed will ultimately not only be forced to pause or skip or whatever you want to call it, they're going to be forced to return to quantitative easing, because the other option is to become fiscally responsible, rein in the deficit spending, slash entitlements, reduce Social Security payments, maybe do a means tested version where people who really need it can still get something, but some people who are wealthy and have paid into the system, they're not going to be able to get their benefits because we simply don't have the money. And, we got to stop trying to get involved in World War III too, which is ultimately going to be, incredibly expensive and inflationary. But again, the Fed knows that none of that is politically viable. So what they will do is they will try to make a big deal of this skip in hiking rates. They're just going to skip it. They're going to get back at the inflation fight soon, but I think very likely that is a fantasy, and this may very well signal that we have already seen the end of the Fed's inflation fight. However, like I said, it's going to take a while for investors to realize that. And so if the Fed skips, we are going to see the price of silver rise and the value of the dollar decline and the US dollar index go down, but it might take a little while. But then again, you don't know what you don't know, and the Fed, sometimes they do the unexpected. So if they hike rates on Wednesday, expect the price of silver to come under significant pressure. Again, nothing has changed in the long-term view here for the price of precious metals. I still expect the outcome of a declining dollar and higher inflation to be essentially inevitable at this point. So, I'm almost kind of rooting for a rate hike, honestly, because I want to stack more silver and I would love to see a huge sell-off in the price of silver. But I don't think that's actually going to happen. I think what we will see is the skip, and that means that the price of silver will be going higher. And who knows? Maybe on Wednesday when they make that announcement, we might see a nice little pop in the price of silver that day. So don't forget, SD Bullion has got their sale. They're doing silver rounds at spot. You can check that out. They've also got, let's see, this is the other thing I thought was nice. They've got 1 kilo Arger Heraeus bars for $1.96 over spot. So definitely some good opportunities there for stackers. Not financial advice, of course. I'm just telling you what I'm doing. I've already got my 1 ounce 10th anniversary silver round at spot in the mail. I picked that up earlier today, so I'll do an unboxing for all of you when that arrives. But yeah, it's going to be a very interesting week, folks. So buckle up, and it's going to be an interesting rest of 2023. If you're catching this after the live stream, leave me a comment down below to let me know what you think. Don't forget to subscribe and smash that like button. Thank you all very much for tuning in. Really do appreciate all of you. I hope you all stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.